As a futures trader, which days of the week should you trade? In this video, I'm going to conclusively answer the high probability trading days and the days that you should avoid. Now, there's nothing worse than seeing your strategy set up in front of you, you're tapped in, and then price goes nowhere. You get into a consolidation or some form of seek and destroy and you get stopped out, okay? Because it's not just about your entry criteria being fulfilled. You also have to be aware of the market conditions. And the market conditions are dictated via the institutions. If the institutions aren't trading and they're not trading with sufficient volume, price is not going to move. It's that simple. So in this video, I'm going to show you exactly the days that you should be avoiding. But there is one exception. There's one asset class that's an exception. So I'll go through all the asset classes. And then last, I will show you the one that is different. And is different for a reason. And I'm going to use 3 years worth of data to prove this to you. So this is a tool called Edgeful. Edgeful produces statistics on various assets. And there are dozens of reports. And it allows you to understand exactly how the market functions using hard data. Now, whenever I run an Edgeful report, I always use 3 years worth of data. That way we are sure we know that the data is conclusive. So this report is called the volume and range by weekday. What it tells you for every asset class, for each day, what was the average range and what was the average volume. We don't want to be trading the days that have low range. A low range day is typically either an inside candle or a candle that just consolidates and goes into a seek and destroy. Now you will see that there's a very strong correlation between the range that a daily candle makes and its average volume. Okay. Institutions trading move price because they basically absorb all the trades, all the bid and offers in the order book, and they force the order book to be climbed either up or down, depending upon whether they're buying or selling. If there is low average volume, we will typically have low average range. So I'm going to go through all the asset classes now, starting with NQ. So NQ, volume and range by weekday, 3 years worth of data. We are looking at from 6 p.m., which is the open, to 5 p.m., okay, which is the close. You'll see here, Monday, average range, 1.7%, 505,000 contracts. Tuesday, 1.9, 567,000. 2.2, 627,000. So you get the picture. Monday has the least volume of the week and therefore the least range. You do not want to be trading Mondays if you want good expansion of that daily candle. Okay, Mondays typically consolidate because there's less trading volume. Okay, let's move to gold. Average range on a Monday, 1.43%. Tuesdays, 2. Wednesdays, 2. Thursdays, 1.52. Fridays, 1.58. The volume, 144,000 contracts on a Monday, 150, 160, nearly 170, 170. For gold, you do not want to be trading the Monday. We have low volume, therefore we have low average range. The market is less likely to expand once you get your entry. Okay, it's typically a consolidation. Let's look at oil, crude oil. Let's look again. Monday, volume 196, 3.3% range. 200, 200, 200, 190. Okay, so you'll see that with oil for 3 years worth of data, Mondays have low range, Fridays have low range. Okay, even Thursdays have low range. You want to be targeting the Tuesday and the Wednesday. Let's have a look at currency futures. Average range 0.7% on a Monday, 162, 170, 200, 200, 186, 1.7, 1.75, 1.8, 1.8, 1.8. Mondays are lower probability for high quality expansion because there's less volume. Okay. A lot of these smart money mentors say volume means nothing. Volume means everything. If you are a smart money trader, and the whole premise of being a smart money trader is you trade with the institutions, if the institutions aren't trading, should you be trading? How do you know when the institutions are trading? When there's volume in the market. That's what moves the market. Okay, so for Euro, if you're looking for that daily expansion, you don't want to be trading the Monday. Okay, now let's look at Bitcoin futures. This is the exception. You'll see that Bitcoin moves the most on a Monday, 5.26%. Okay, 4.8, 4.9, 4.3, 4.4, 30,000 contracts, 29, 29, 27, 22. Why is Bitcoin in a different cycle? If you look at the CFD for Bitcoin, so let's say BTC USD, you'll see that it trades 7 days a week. Bitcoin and crypto on a different cycle because you have Saturday, Sunday trading. That's why it's Monday is the anomaly. So if you're not trading the Monday on the other futures contracts, you might want to trade Bitcoin instead on the Monday. If you would like free access to Edgeful for 7 days, there's a link to a trial in the description to this video. If you would like to learn how exactly I trade time and price and volume using the golden bullet for index futures, Forex, metals, energies, and crypto, there's a link to my mentorship below.